Welcome back to the channel, my fellow traders and investors. NIO stock has finally broken out exactly how we predicted in yesterday's video. I told you guys clearly to expect a move higher to the upside, the exact entry points, all of that, so congrats to those of you caught the move. But in today's video, I'm going to be breaking down its updated price target, technical analysis, and what I plan to be doing now that it's broken out and how I plan to be trading and investing in it at this point. So all I ask in return is that you subscribe so that this video can be pushed out to more traders and investors that need a better understanding of where the stock could be heading. And if you want to learn technical analysis for yourself, be sure to go get my new book, A Technical Trader's Handbook, on Amazon, which was the #1 hot release in public finance in the world. So be sure to go get it, and let's jump into the video. Alright, so jumping into the technicals on the 6-month 4-hour chart, we can see a few things right off the bat. So yesterday I told you guys clearly how we were forming this inverse head and shoulders. We are a left shoulder, head, right shoulder. At the same time, we were also forming an ascending triangle, right? We were forming, getting tighter and tighter and tighter in this range. And I told you guys to watch for this breakout above this level here at 36.75. And that's only when I would personally be looking to buy. So if you did end up catching that move, you'd be up about, about 2 to 3% already, right? So pretty solid return for maybe a quick day trade, right? But overall, the strategy is obviously to swing trade it for a longer time. But as we can see right now, we can see how NIO stock is finding resistance here at the 200-day SMA, which is this green line, right? We're finding resistance at this level, and this is an area that we were previously finding support at right over here, right? As we were moving lower, we're trying to find support, and the 200-day SMA shows that the overall trend and where the overall trend is going. If it's pointing down and we're below it, obviously we're going to go down. But the moment we break back above, we could see NIO stock head a lot higher. That's why when we broke below it right over here, we saw this massive downtrend. So it's a big signal of the overall trend direction. Now overall, we can see a very healthy volume this morning as well, a big volume spike, and this is something I told you guys to watch for as well, right? Right now NIO is at a very cheap level right now. Earnings are in just a month, delivery numbers were very strong, so it's very likely that obviously big institutional buyers and even retail investors in general are going to be buying it heavily prior to earnings, where obviously we're expecting some really good numbers and also some future guidance on their future expansions and how the chip shortage, all of that is affecting them and where they plan to be going from there. So it's nice to see buying volume step in, and I expect this trend to continue as more buyers buy in anticipation of their earnings. Now going to the 1-month hourly chart, we can see how the stock is now also forming higher highs and higher lows. We're now in this uptrend channel pattern, and we're also holding the 9 EMA, which is this blue line, as support. Now the reason this is so important is because the 9 EMA shows a trend direction, and it also shows that buyers are willing to pay a premium compared to NIO's shorter term average price. So you can see even today, right, we pushed up, we pulled back, and now we're finding support at the 9 EMA yet again, further signaling buyers stepping up at that level, and it's nice and healthy to see. And I think now we could potentially see a recovery back even higher as well, so that's good as well. Now overall, we are somewhat overbought. Even on the 6-month 4-hour chart, we were a little overbought on the RSI. Here as well, you can see we have reached a peak on the RSI as well. We are in overbought territory. So personally, what I could see happen at this point is NIO stock could most likely consolidate at this level, or potentially even pull back down here again to 36.75, but stay above it. The reason I say that is because it's very common, very common, that previous levels of resistance turn into support before a further continuation higher. So now that you get a rough understanding of the technicals, let's talk about my price target and how I exactly plan to be trading this and investing at this point now that we've broken out. Now before we do jump into the strategies, be sure to go get my new book, A Technical Trader's Handbook, on Amazon if you want to learn advanced trading strategies and a lot more that have allowed me to help you guys catch over 100% moves simply based off the technicals. So be sure to go get it, and let's jump into my strategies. So like I mentioned yesterday, I took an initial position into this breakout because that's pretty bullish, right? So now if NIO does end up pulling back to this level here at 36.75, I'll be waiting for it to turn into support. And once we turn into support, if you can then start forming higher highs and higher lows, then I'll be buying into that and see and watch for that continuation higher. Now on that continuation higher, even if we don't get a pullback, let's say even if we don't get a pullback and just continue even higher tomorrow, like I mentioned yesterday, I think the next price level is all the way up here at about $39 a share, where we had some pretty strong levels of resistance in this area. But overall, again, if I place in the Fibonacci retracement now from our swing high all the way up here down to our swing low, my key price target is going to be at about this $44 level, where we had previous level of support in this area. But at the same time, that's also our 50 retracement, which is like that midpoint, right? We have our 0, we have our 100 level, and that 50 retracement level is that midpoint level where we usually tend to retrace up to. So I could see NIO stock probably head up to $44 on a potential earnings beat next month, or even leading up to it in the coming months, as there's a lot of anticipation building up. And if obviously the US economy continues to recover and the Fed signals that inflation is nothing to worry about, and overall positive news, because what we're taking a look at right now is the technicals, but at the same time monitoring the fundamentals, the economy is very important, right? As we know, the chip shortage has led to a deadweight loss between supply and demand, and so these are very important economic factors to be considering before you trade and invest always. So now that I've taken an initial position at this level, and again, this is not financial advice at all, make sure you do your own due diligence. I'd probably be adding more into this break above 39 if we already have this key level of resistance. Very strong resistance level, we'll probably face resistance there, but on this break, probably add a little more into that. Then on this break above our 61 Fibonacci level, which also happens to be a previous lower high right over here where we had very strong resistance, if we break that into each break, essentially into each break above a key level of resistance, each breakout, be adding into that with a potential sell target here at the 50 retracement. But obviously these channel patterns, the way they tend to play out is from the swing low up to the swing high. These are usually unlikely, with the 50 retracement being the main point to sell, but obviously depending on the factors and the technicals, the best way and usually my most optimistic price target would be trading it from this initial breakout to the swing high. But now that we've talked about the bullish scenario, let's talk about what happens if NIO stock ends up dropping, because that is totally possible. I'm not going to sit here and be like, yeah, NIO stock is only going to go up. I only tell you that when I have full conviction, like yesterday. But let's talk about what happens if, let's say, some negative news comes out, or let's say the overall market just sells off for some reason. Well, like I mentioned, NIO stock, I think it's very likely we pull back down to 36.75, which also happens to be the bottom diagonal support line of this higher high and higher low channel before that continuation higher. Now, if we do end up pulling back, then I think the next level of support below that level would probably be down here at about 34.75, where we had a previous level of support as we were consolidating in this area. Now below that, then the next level would be all the way down here at about 31.50, where we had our swing low right up here. This is our pivot point after a massive downtrend, and it was also a pivot point after this massive downtrend way back over here before the push back up. So $31, $34, those are the two levels to be watching out for on a potential move lower, right? If we do break back above this 36.75 level, I potentially might be looking to exit, get out at break even or maybe a couple dollar loss, and then look to go on the short side for a play down here at 34 or 31, right? You got to be able to trade both sides. That's how you always win. That's how you always make money. So with that being said, guys, that's the video. If you enjoyed this in-depth technical breakdown, be sure to like and subscribe, and go get my new book, A Technical Trader's Handbook, on Amazon if you want to learn all these advanced trading strategies and a lot more to take your trading to the next level and learn how to catch moves like the ones I've told you guys that have returned over 100% gains simply based off the technicals. So be sure to go get it, and I'll see you guys in the next one.